top stories then tonight. The Chancellor has introduced support on childcare and energy bills in his first full budget as Chancellor, with the economy forecast to avoid recession this year. Unions claim up to 500,000 workers went out on strike today, the biggest day of industrial action for years. Junior doctors, civil servants, teachers, lecturers and London Underground staff all joining the walkout. And stock markets have fallen across Europe, driven by concern about the financial health of the Credit Suisse bank. Well, let's get more on that now. The US Treasury is reviewing its exposure to Credit Suisse as fears grow of contagion in the global banking system following the collapse of Silicon Valley Bank last week. Let's get more and speak to Andrew Sachs, a senior executive at the People's SCE, as well as the founder and former chief executive of the Finance Feeds Banking News website. Good evening to you. My first question was going to be, what's the prognosis? How bad does it look? But are you slightly heartened by the intervention earlier this evening of the Swiss National Bank offering liquidity to Credit Suisse should it be needed?
Yes, that's actually quite interesting, but it could be perceived as a little bit of a placebo, because if we cast our mind back to 2015, the Swiss National Bank has enough of its own decision-making powers to decide what it wants to do without really consulting other financial global bodies, because they pulled the plug on the Swiss franc and euro peg overnight, and it caused incredible volatility in the global markets, to the point where a lot of banks lost hundreds of millions and some trading companies went out of business. So this is something which it might be a lifeline now, but the Swiss National Bank has enough remit to call it in whenever it feels like. So that's one aspect. But of course, the liquidity crisis that the Credit Suisse is actually facing should perhaps not be so much of a surprise, because the bank has made losses over the last couple of years, and it's really got itself involved in the Archegos hedge fund matter, which I'll come back to later. But of course, there's been quite a few signals that certain decisions have been made within the company, and this is a tier one market maker, of course, which makes the currency market. It's right at the top of the currency market making structure. So any decision that goes wrong by Credit Suisse has immediate impact on the whole wider European economy.
Well, Credit Suisse has tonight welcomed that statement of support from the Swiss National Bank and also from FINMA, which is their banking and financial regulator, which suggested that Credit Suisse does meet the capital and liquidity requirements of those big banks. But if we row back to what caused it, the Silicon Valley Bank was described as a one-off, and certainly we've seen regional banks in America under pressure. Is this about contagion spreading to Switzerland, or is this just picking off the weakest link after, as you suggested, losses have been made recently?
I think it's a very different matter to the current situation in the US. We've certainly seen Silicon Valley Bank. That is the demise of that is very much remarkable, because that's the second largest banking collapse in US history, despite, of course, lots of regulatory overhauls having been brought into the United States over the last few years. Immediately after the financial crisis in 2008, 2009, the Dodd-Frank Wall Street Reform Act was brought in to overhaul the whole way financial infrastructure works, and of course make it so that lots of reporting had to be done on a daily basis at how prices are arrived at by trading entities, or how all the extra reporting and capital adequacy requirements were brought in. But still we have banks going bankrupt. Yes, it's for a different reason, but the end result is the same. You have a bank which is run by a series of directors and decision makers, which makes those decisions, and should they go wrong, then the losses are socialized. So you have you and I and everybody else, and potentially, if there's no government backing in some cases, their depositors paying for the misadventure of those leading the banks. And of course, that's the US contagion, and of course, as you rightly say, the regional banks. There was a couple of examples this morning of some regional banks having actually lost 61% of their share price over a short time. So it's affected the regional banks more. But in Switzerland, the Credit Suisse circumstance is independent completely to that. There's been a series of of loss-making years, which started until 2016 was the first year that Credit Suisse had made a loss for 8 years. And that was the beginning of it. There was a lot of layoffs after that. And then the company went on a quite aggressive mergers and acquisitions spree. And then 2021, they made a loss again. And then largely that came down to the company having involved itself in the Archegos hedge fund debacle, where Mr. Huang had been banned from trading in Hong Kong. And Credit Suisse actually helped him move his trading business to New York, rebrand it, and then begin again effectively. And it lost the bank $5.5 billion when they actually got caught in Mr. Huang's trading activities. They knew that he'd been banned from trading in Hong Kong. So this was a decision made by senior decision makers within Credit Suisse, which, as I said, is a tier one investment bank, tier one market maker, should be very trustworthy and responsible. But they knew they were actually investing in and helping someone who'd been banned for his trading activities in Hong Kong. And then, of course, after that,
Andrew,
there was...
Can I just ask you one? I'm going to butt in just very briefly. The Telegraph reporting tonight that the Bank of England is in emergency talks with international counterparts over Credit Suisse. Certainly saw the market pounding today, recovered a bit later in the US markets, presumably after that Swiss National Bank comments. But what are your broader concerns about the banking sector? Or is this just going to be that, that second biggest Swiss bank we're talking about here?
I'm really glad you asked me that question, because that's the most relevant thing here, is what is going to happen to the entire banking sector overall. The answer to that is that there's a pattern formed that's been forming over several years. And what that pattern is that banks take risks. They take deposits which are customer deposits, whether they're, in the case of Silicon Valley Bank, most of them were corporate deposits made up of large-scale venture capital that was given to startups and high-tech firms in the Silicon Valley area. So the inflows of capital were coming in rapidly, and the decisions to hedge that capital and actually use collateral were made by the senior executive boards of those banks, and decisions in some cases were not that great. And of course, what that means is all of the end result is the same. If a bank collapses or gets itself into a point where it's affecting the entire global markets, like Credit Suisse right now, you've seen 75 billion be wiped off the FTSE 100 in England just by Credit Suisse crisis. So it has a wide effect on everybody, every investor, every shareholder, every company, everybody that's involved in the global markets. So what we're perhaps seeing is a situation where the whole structure of banking needs to change, and the whole way that business is done in the financial market should be changed. And perhaps it should be done in a way that those with the concentration of power should be more distributed across those who are investors, and maybe make more member-orientated societies where members are part owners and are therefore able to vote on policy. Because, of course, the centralization of decisions, if you are a senior executive in the banks and it goes wrong, you can socialize the losses and then go and work somewhere else. It doesn't really have that much of an impact. Okay. But it does. That's all removed if you go down the road of decentralization, and we move away from the sort of central and commercial banking structure and more into a sort of democratic system where you have even the technology to do it nowadays, with a lot of distributed ledger technology and blockchain.
Andrew, we're running out of time. I'm going to have to butt in. I do apologise. Big structural changes, you think, is what's been prompted by, first of all, SVB, and now what's happening in Switzerland. Very good to have your thoughts. Thank you very much indeed. Andrew Sachs, thank you very much indeed. Thank you. Now, an operation to arrest Pakistan